The way that we can trade this, there's several different ways. Let's talk about them. The simple way is when price moves underneath the PMZ. There'll be sometimes that we gap down and the PMZ will be above us. Anytime we gap down and the PMZ is above us, look for the PMZ to be resistance until proven otherwise. Aggressive traders, you will short here and your stops will be above here. Conservative traders, my approach on a conservative trade is when price is moving in, the closer we get to the backside, then I place my stop. And the reason why I do that, because I'm not taking full risk here. My stop is now at the backside, and now my risk is cut dramatically in half or even by 3/4. Okay? We showed that trade this morning on how to approach that. Okay? Gap ups. If price gaps up to the upside and price starts to come down, we look for it to be support. Aggressive traders, you buy here and your stop is here if you're okay with the risk. The risk is defined by the top and the bottom level. If it's too small for you, feel free to increase it. If it's too large for you, I would stay away or use the micros. If we are starting in the middle of the PMZ, say this is what's happening, I call this a neutral because really I'm not biased. And if price breaks over the top of the PMZ, look to go long if you want to be aggressive. As soon as it breaks, you're aggressive. Conservative traders, you wait for the candle to close. If the candle closes here, now your risk is here to here, not here to here. It is where the candle closes, so you have increased the risk of your trade. You got to figure out which one it is. When taking PMZ trades, we're always taking into account where the levels are. Let's say we have a daily edge here. Before taking a trade, you must always understand your risk to reward. If your risk is 3 here and your reward is 10 to here, it sounds like a good risk to reward. If for some reason taking this trade, okay, and the risk is, let's say, risk is 3, but your reward is 1, you may want to wait and be conservative to see if we can even close over that level. It just makes sense. Here's another approach. If we break down, aggressive, soon as it breaks down to the downside, you're going short here, and your stop is up here. Conservative, you're waiting for the candle to close. But your risk is where the candle closes and the back end of the box. You have now increased your risk. Not a big deal if it looks like this, but if the candle closes all the way down here and you decide to go short there, there is a high probability that most likely after a big trajectory down like that, price is going to bounce back up. I'm going to ask you to apply the Fibonacci rules. Place your Fibonacci's from the pivot to the pivot. Find your 23.6 and your 38.2. Let's just say that they're right here and right here. You hit one of those levels. You look to go short. You're still underneath the PMZ. And this is from a Fibonacci standpoint. Some other things that you could do is if we have a PMZ and say that price is moving up, but gaps way the heck up here. Another trick that I like to do, if it's so far up here and the PMZ is way down here, what I want to do is take the range here and I want to pivot my Fibonacci's from that pivot low and that pivot high, and I want to see where it falls within the coefficients of Fibonacci. So let's say that the 23 and the 38 are here, and let's say the 618 happens to be right here. The 618 is the golden Fibonacci, and therefore I would feel better about trying to take my limit trade when price hits here, because we are looking for this reaction. Does everybody understand? Same thing if we have a huge gap down, measure the range, look for 23 to 38, and then look to short if the PMZ happens to be in that range. Do the same thing for 30 days. Then at the end of 30 days, if you're not doing well, I would be shocked. Just PMZ trades. Don't move your stops. Don't get in a good mood and say, I'm going to do $2,000 of allocation today, and I usually do $200. Be consistent. Allocation, same every single trade. Same rules, every single trade, and do it for 30 days, period. If you can't commit to that, then I don't think you should commit to trading, period. You got to be consistent. Come in every single day, wake up at the same time, be ready to trade. I hope you have that in your blood. I seriously do. I hope you're pumped every single day. It never goes away from me.